Hello, everyone. It was a very negative session on Wednesday for the stock market. We're going to start it off with the NASDAQ. The NASDAQ managed to sell off, and if we look up close here, you can see the 3401 close is below the low a day of the third of 3419. That now gives us a definitive, without a doubt, now lower highs, lower lows. While we were doing lower highs, we still didn't put in lower lows yet, and now we are doing that. And even though today is not a technical distribution day on the NASDAQ, volume was heavier than average, and that continues that above average volume price action that we've seen since, I believe it was the 25th of May. Was it the 20th? The 22nd. God, not even close. Well, close in the middle of both days of May, and now we are rolling over. So we saw a distribution day and a couple of churning days leading up to that session on the 22nd, and since then it's been above average volume churning, and now we're resolving ourselves lower, so that is not looking good. The S&P 500 also resolved itself lower, and even though it's above the 50-day moving average, you can see the weakness in that chart is inherent. The New York Stock Exchange managed to close below the 50-day moving average, so that one is leading to the downside. The Russell 2000 also had a weak day. Like I said, when it comes to the Russell 2000 NASDAQ, it isn't horrible, but the overall selling is evident. And if you go and we look at the inverse, ETFs, for instance, we can see that, a lot of things is happening. You can look by EDZ, FAZ, DRV, SPXU, VXX, TZA, EEV, EWV, especially. Look at that. NUGT, gold stock starting to look good, and China short FXP turning around, and of course one of our hedges, SQQQ, looks extremely bullish. And then on the other end, you have the UDOW and SPXL looking very ugly. So we've got pretty much confirmation everywhere on higher volume that the sell-off is bad. You can see by looking at the SPY, QQQ, and Diamond, and IWM, that volume is very heavy. And one thing that you'll notice on the last leg up, like on IWM, notice all the heavy freaking Windows 8. I absolutely hate Windows 8. I mean, I swear to God, it's the worst thing that they've ever created with the touch screen. It's just horrible. Windows 8, you're absolutely horrible. Okay, once again, moving off of that subject. But as you can see in IWM, we had distribution in April, very, very heavy amounts of distribution, but we managed to resolve ourselves to the upside. However, volume was below average the entire way up, and that continued to trend. We saw that in September, October, and November with this ETF, and now we're starting to get it again. So if we break up to lower volume on the upside, I wouldn't be surprised, but at the same time, the distribution is starting to get very clear. There's the SPY for you, there's the diamonds, and here's the QQQ. What do you see a ton of? Red bars, even going back last year, September to November. What's dominating on this chart pattern? Big, giant red bars. Got some big, tall green bars, but then where did they go? They almost never showed up during the entire uptrend, and here come the big, tall red bars again. Once again, I believe the QE market is going to be a market where eventually we will find lows and be able to rally higher as long as we're doing POMO, QE, ZIRP, as long as that is in effect. I assume we'll just continue to distribute on heavy volume, find support, rally to new highs on no volume, suck in more of the crowd, sell off, let them distribute into it, and then repeat the process over and over and over, as I just don't see how this turns out well. And speaking of short-term problems, let's look at the home builders. Look at Ryland, a clear leader during the last uptrend. You can see it's now rolling over below the 50-day moving average on heavy volume. And as you can see by looking at the S&P home builders ETF, not good, breaking down below the 50-day moving average on heavy volume yesterday and confirming on a follow-through breakdown on heavier volume today. And IBB finally breaking below the 50-day moving average on heavy volume. You can look at one of its leaders, Celg. That is quite a crack. It cracked the 50-day moving average on heavy volume. Did not break the lows, but now it's breaking below those recent lows on even heavier volume. That's a 50-day moving average breakdown confirmation. Once again, like I said, not good. And then also at the same time, as you see FAZ rallying off the lows here, FAS you can see starting to sell off and roll over on strong distribution. You can look at Ben Franklin Resources, which isn't necessarily a bank, but is a big financial services firm. And you can see that it's starting to roll over on very heavy volume. And if we look at JP Morgan, Goldman Sachs, and Bank of America, we can see that there's some red tall bars that are starting to show up that could be troublesome. So we all have to watch that. Today's price action in the indexes with the volume confirmation across the board in the ETFs means that we are now under a sell signal. It's more of a cosmetic sell signal as anything because we don't have any full sells tonight. Nothing broke the 50-day moving average on huge volume or forced us to cut losses. Everything is still trending up. We do have partial sells. SBGI, first crack below the 50-day moving average on heavy volume. That is a 50% sell. If it closes down again tomorrow and volume is above average, and let's say Red Bop especially increases, SBGI is a full 100% sell. CAT is a 50% sell. If it breaks down further, once again, it will become a full sell. VIPS is starting to roll over below the 50-day moving average. Since it's on lower volume, it's not a 100% sell. But if it follows through tomorrow on a higher volume sell-off, VIPS will be a 100% sell. And BK is a 50% sell. Harsh closed below the 20-day moving average, erasing the gains. 50% sell. If it sells off below the 50-day moving average, though, you can be sure it will be a complete sell. Another heavier volume sell below the 20-day moving average, even if it stays above the 50-day moving average, will definitely be a full sell also. And then OCN is closing below the 20-day moving average on heavier volume, 25% sell. DDD has lost its green bop, of course, over the past 2 days, and there's no bounce. And when I look at XONE and I look at SSYS, there is no doubt in my mind that DDD can't follow that pattern, so we'll protect some more gains with a 25% sell. MEI is closing below the 20-day moving average. That's going to be a 25% sell. INSM is closing below the 10-day moving average. And since biotech is really starting to weaken, you can see there's BIIB. ALXN's already broken down. I want to be careful here, and I'm going to go ahead and take 25% of my profit with this close below the 10-day moving average, as this is the first time it has done that since its most recent move higher, and the 20-day moving average is pretty decently far away. If I let it pull back to there, I can lose. I think we have over a 60% profit. At the highs, we had an 85% profit. I'd hate to see it close below the 20-day moving average and leave me with less than a 50% profit when we had 85%. So that's why that's 25%. PERI is closing below the 20-day moving average, below average volume, but it's lost its green bop quite sharply, so that is also a 25% sell. What looked good on the long side? TTS. But for a share offering and for as well as it did, because I think they priced it around 24 something, that did great. But on an arithmetic chart, you can see that it's a V-ish short-term V-shaped pattern, V right here. And in this market, that isn't going to cut it for a long signal. I decided to go look back at LQDT as the last time I can remember getting a share offering from a pattern that wasn't perfect, but by perfect I mean just absolutely long base, but it was a very high quality. And I remember whenever, not the share offering, but whenever I made a decision to go against basically back here while the NASDAQ was going up, LQDT put in a move, and I thought that, oh man, I'm kind of cheating taking a position like that in a stock like that. But you know, it made a lot of sense because look at how nice and tight that little pattern is. And I don't know why I'm quite using LQDT to reference TTS, but the fact that my brain is doing that tells me that there is something about the pattern. It might be all the previous green. But TTS just is not the same thing. It's tight, but still overall it's just it's not actionable based on that short-term pattern. What is actionable today is UVXY. You can use TVIX, VXX, VIXE. I don't care. I use the UVXY because of the volume. and just because it's better than TVIX, which is an ETN that just appears to be not quite as responsive. Close above the 50-day moving average, especially with the gap above the 50-day moving average, is a 5% add. There are hedges, especially since we're now under a sell signal in both the risk and non-risk account. And FARO is actually giving a short signal. Like I told you, UCTT is a perfect setup. That did work well today. That was yesterday, but it came without us in the sell. IO was also a perfect setup, as you can see. It's working out pretty well so far. Actually, it could be shortable now today that we're in a sell signal. And FARO has that similar pattern. We'll see how it resolves, but it's looking weak. But then also I notice on this side, Facebook is rolling over, so that could be shortable, and then its brother LinkedIn appears to be rolling over, so that can be shortable. So things are not looking good. Our leading indexes are starting to show some cracks. Even saw the consumer discretionary ETF crack hard today. So be careful out there. We're under a sell signal. It's going to take a perfect chart to be a buy, or a near perfect chart, or an extremely huge fundamentally growing stock like Tesla or SCTY, since it's related to Elon Musk. We'll consider that into the loop. But it's going to have to be a great breakout to get long in this market.